It's Friday, March 5th, 2021. My name is JJ. You're watching Bull, Boom, Bear, Bust. Thank you for joining me. We have some more just absolute awful news on jobs. And we're also going to look at the markets here to wrap up the week. The markets just closed about 15 minutes ago. And this, again, is just awful. 75% of all jobs added in February were waiters and basically bartenders, servers. 379,000 jobs added. Pretty good, right? Well, not really when you look at about the 3 million new unemployment filings every month, but it was higher than expected. But here's the sad part. About 3 out of every 4 jobs were service sector, waiters, bartenders. And here's the chart right here. You can see at the top, leisure and hospitality. In February 2021, last month, is the black line. So you see that just dominates the jobs that were added. And if you look down here, you see construction jobs actually declined when that is the sector that really needs the most people. I mean, we need more homes more than just about anything else. We see this housing shortage because of this surge in demand, and the construction is not keeping up with the new population growth. Population growing for many reasons. All right, so this is bad news. Now, a lot of people think that when we get to the pre-shutdown economy that everything's going to be great. It's going to be back to what they call normal, quote unquote normal. But let's remind each other here that normal was already not good. We were already under massive amounts of debt as consumers, as people. It was already worse than the financial crisis. What kept it going was market rigging, market intervention, ultra low interest rates, endless bank liquidity programs, the moratoriums, eviction bans, so forth and so on. You know the story. All right, now let's go over and take a look at the markets here. And I want you to remember that a lot of this optimism and the reason markets are up big is because of the new job growth. But a lot of these are just jobs that people lost that they're getting back. And again, they're getting back jobs that were allowing them to barely scrape by. Right, it's the service sector economy. We've spoken about that numerous times here. About 70% of the U.S., probably more now, but the last time I checked, it's about 70% service sector. Manufacturing's been obliterated. Manufacturing did not come back over the past 4 years like it really was promised to. Of course, when do any of these lawmakers and leaders keep their promises? Hardly ever. Now, there may be some trivial things that they'll keep their promises about, but let's take a look at the Dow Jones. Absolutely skyrocketed, 572 point gain. S&P 500 similar, almost 2%. NASDAQ 1.5%. Russell 2000 over 2%. Oil another surge up to $66. Remember back at the beginning of the shutdown in spring 2020, oil crashed to zero, and anyone that got in on that trade made out like a bandit. Now, I actually got in at that time, but did not hold up until now. I think I got out at about $35 oil. It was an ETF. There's a lot of problems with ETF holding them long term, so I chose to get out of it. But I won't complain about making a gain, even though it wasn't as big as it could have been. Gold and silver took a hit. How much price suppression are we witnessing here that we can't really see directly, but we know by the price action that it appears to be suppression, right? When you look at the silver brokers, you go online and there's several week delays, you know that the demand is there. So why is the price not rising if there's this crazy demand that's having these brokers backlogged? So just that simple analysis, will tell us there's likely some sort of manipulation happening behind the scenes. And it's not some crazy theory. Actually, banks have been fined for metals market manipulation. Just type it in and you'll see the results there. Why do I say that? Because there's always somebody down in the comments, a few people, oh, JJ, there's nothing happening. They're not rigging the market. That's some crazy theory. Type it in, metals, rigging, banks, fine. That's all you have to do. Just type in those 4 words, metals, rigging, banks, fine, and you'll get the results. Now, I want to read you an excerpt here out of another nice article of Charles Hugh Smith at of2minds.com. Just type that in if you want to read the full article, but here is an excerpt from this article. We all know the status quo's response to the global financial meltdown of 2008 has been a travesty of a mockery of a sham, smoke and mirrors, phony facades of quote-unquote recovery, reforms, serial bubble blowing, and politically expedient can kicking, all based on borrowing and printing trillions of dollars, yen, euros, and yuan, etc., and funneling them to financiers, corporations, monopolies, cronies, and billionaires. So I think that article sums it up pretty well. It echoes a lot of the same things we've been talking about here on this channel. Also, even with the jobs, some jobs are coming back. Not good jobs in most cases, in many cases. Even at the same time, though, 4 out of 5 women are under financial stress. Now, this study just focused on women. I'm sure it's not far off when you look at men. But this was a study of over 2,000 people, and it goes right along with, or pretty close to, what we've been describing here in this channel about how most people are living paycheck to paycheck. People are worried about retirement. They see the rising prices. They see the central planners, the bankers, not allowing deflation. Infinite liquidity for the banks. Bubbles blown beyond the anyone's wildest imagination. And it seems like it's never going to stop, and the stress just keeps increasing and increasing. There are some people staying ahead of the game, but you have to be mostly an active investor or someone that bought way back when things were really, really cheap. So there are exceptions, but for the most part, especially young people getting out of high school, getting out of college, entering the workforce, and many of those people with debt that they'll likely never pay off when it comes to student loan debt. This is what most United States citizens have come to now. Financial stress. Most people are under some sort of medication or on medication, under anxiety. Mental issues exploding. The use of antidepressants exploding. Also, recent Box Business article here. U.S. debt on track to double by 2051. I think it's going to be worse than that. If you look back at just the past year, we've created out of thin air 25% of all dollars in existence just in the past year since the shutdown. So if we keep going at that pace, we're going to double the debt much sooner than 2051, which is 30 years away. And some people say, well, it doesn't matter. It's unpayable anyway, and I agree with that. But here's what's going to happen. They're going to say, look at all this debt. You people that are working, you need to help pay for this. Right? We need to take a bigger portion of your paycheck to pay for all this spending. That's how it works. There's no printing press to pay for all this. There's a printing press that creates debt, but we're not going to print it to help you pay off anything. All right, folks, that's how it goes. I'm sure most of you know this by now. I'm waiting for this whole system to implode. Bubbles always burst. The Fed, the money printers, they're going to have something happen. They're going to say, hey, we tried to prop up the markets. Something happened. We hit the wrong button. There was a glitch, quote-unquote glitch. Everything went dark. Sorry that we couldn't hand out the checks anymore. And we had to stop paying out these benefits to people. We're sorry that the Social Security checks stopped getting sent out. And we're sorry that everything transitioned into chaos. We're sorry about the millions of starving people that we can no longer send out checks for. We're sorry that crime quadrupled. And we're sorry that all the millions of people that were formerly dependent on the handouts are now robbing, stealing, pillaging, and worse in some cases. We're sorry. We're sorry, and we're sorry that you weren't prepared for everything to turn into a Mad Max. But I hope you are preparing. Thank you for being here for this report. We're going to see you on the weekend. Please tune in. We got some important news to cover on housing and more. Thanks everybody for being here. Stay well, stay safe, stay prepared. Bye for now.